Josh, I guess the central question, buyable dip, or is this now the start of that correction that we've been thinking might be coming? What do you think? Because I look at you as a seller today, and I see you selling a stock that you loved, that you made the case for multiple times on this show, that you had bought just back in April at the end, and that is Leslie's. It's a pool supplier. It's been down in the last 3 months, and you're a seller. Can you tell us why and what that says, if anything, about your big market view?
No, it has nothing to do with my big market view. Leslie's did something disgusting shortly after I started to buy it. They did 2 secondaries in a row, neither one of which was raising proceeds for the company to use. Basically, they were creating space for some of their larger shareholders to sell. I don't mind if you do that once within a few months of the IPO, but if you do 2 in a row inside of a 60-day period, basically you're gross, and I don't do business with gross people. So I'm out. I guess I got it wrong. I think I came out at something like a 20% loss. That's okay, though. I'm adding to other positions right now, and I would not interpret the sale of an individual stock as a market call. I don't make big market calls. I'm as bullish as ever. I buy every dip. I buy every correction. Okay, interesting, because Stephanie Link, Jim Cramer says it's too soon to buy this dip. That terrible day we had yesterday, he says, quote, mindless dip buying has been a great strategy for the past 15 months, but it's worthless in the face of a serious sell-off, which is what we have now. You must not agree with that, because you did buy on the dip, and you bought Caterpillar, and you bought Diamondback Energy yesterday. Can you tell us why and what you make of what Cramer says and what your move suggests that you don't agree with that?
Because I'm focused on fundamentals, I don't know how to time this market. I don't think anybody does. All I try to do is buy low and sell high. And these two stocks are down quite a bit from their highs. But let's just step back for half of a second here. September, we have all talked about, is a volatile month, and this year is no different. We have worried about Delta for a while and peak growth. Now it's China. But this against a backdrop of the economy and data that's actually coming in pretty good. Retail sales is 10% above pre-pandemic levels. Industrial production is just 2 percentage points below pre-pandemic levels. We've seen a snapback for sure. But more importantly, Scott, I listened to all the conferences that are going on. And 2 weeks ago, Vertical Research had an industrials conference. And every single one of these companies there talked about the demand is strong. It has not wavered at all. It's the supply side of things that are giving them headaches. Thankfully, many of them have pricing power. And thankfully, several of them have done restructurings. That brings me to Caterpillar. I think the demand is going to be off the charts. Ashtod just reported last night. They told you it was. They just raised their numbers. But the stock CAT is down 26% from its highs. It's a very strong U.S. infrastructure play. It's a restructuring story, so margins should hold in. It's a rising free cash flow story. They're going to generate free cash flow this year of $1 billion. They're buying back $2 billion worth of stock. It trades at 19 times, a discount to the market with a 2.2 yield. So that is a good story to me. That means when the stock breaks, that's a buying opportunity. It's down 26% from its highs, as I mentioned. Diamondback, kind of same deal, right? It was down 6% alone yesterday, and it's down 20% from its high. Last week, they announced an accelerated buyback program. So they feel confident in their fundamentals. CapEx is coming down. Production is going up. They're reducing debt. So to me, I am not going to time this market well. I know it. But if I can average into really good, strong fundamental positions, which I know Jim would agree with, if you can do that and you can buy in small increments along the way, well, then I'm going to do it all day long. Okay. Which brings me to Mr. All-In, better known as Farmer Jim, who has been bullish, arguably more so than anybody else on this program. He sees the Dow Jones Industrial Average go down 900 points yesterday. He looks at his portfolio and he says, I have to buy more. Nothing. You didn't buy anything on the dip. Cleveland Cliffs. I'm all in. Cleveland Cliffs was down 10% yesterday. You called in and made the case as to why you love it. It's down another 4% today. I don't see you buying anything. Hey, what's going on, Mr. All-In? You just got a 1,000-point gift.
Yeah, I'm all in, Scott. I mean, it's the simple math of if I'm at 2% cash, I'd have to sell something to buy something. I'm not selling anything. I
Didn't you ever hear of
love
margin?
my portfolio right now.
Be somebody. Step up.
That's okay, right. Josh. The sad thing is we can't see each other the way we used to be able to on the desk. I have to assume that Josh is laughing and smiling as he says that. We all know that margin is the way that people get into deep trouble. But let me continue. Absolutely nothing has changed in my outlook. Absolutely nothing. And Cleveland Cliffs down 10% yesterday. That is just the market being irrational, which it does from time to time. If it weren't irrational, all of us on this show and you, Scott, we'd have nothing to talk about. Okay? Sometimes it gets irrational. If you don't own Cleveland Cliffs and you're not buying it right now, I can't help you. I can't make the case any more clearer or logical than I did yesterday. Their costs are going down. Their revenues are going up. You're going to get free cash flow sent back to you. What Stephanie just gave us 2 minutes ago as far as the economic backdrop was perfect. No surprise that I love what she said. The economy is actually quite strong. We're going to go through a massive inventory restocking. And companies like Cleveland Cliffs or Marathon Petroleum or GM, these are the companies that are going to be providing the goods and services that are needed to build those semiconductor plants in Arizona. Union Pacific is going to be needed to transport goods across the country, including all of those containers sitting off the port of Los Angeles and Long Beach. I mean, you just have to look forward past 2 weeks, which if you're a long-term investor, you can do. But the market will be irrational.
I think Josh Brown said
let me make this very clear.
Okay, go ahead.
I'm all in,
not clear.
Scott, not wavering for 1 second. I am all in.